We maintained our policy interest rate at 5%.
Bank of Canada Governor Tiff Macklem says he isn't ready to cut interest rates just yet.
We want to see inflationary pressures ease further. We want to be convinced we're on a path back to 2% inflation. And when we have more assurance that we're on that path, we can start discussing lowering interest rates. But we're not there yet.
Along with holding the key rate steady at 5%, the Bank of Canada says it can see inflation persisting close to 3% for the first half of this year. And it will take until 2025 to return to that 2% target. Now, a big part of this is the rising cost of shelter, which shows no sign of slowing down. And that's impacting the majority of Canadians, as RBC economist Claire Fan tells us.
Largely, a third of Canadian households are renters, right? So a third are renters, a third are mortgage holders, and 2/3 basically are all facing pretty steep increase in shelter costs.
And this might be where they're starting to prep the markets to think that they might have to start cutting, even with shelter costs holding very high, because as they comment, these are structural factors and they expect shelter costs to remain elevated for several years.
TD Chief Economist Beata Karanci says we won't have long to wait before the Bank of Canada moves to cut rates.
The markets are leaning towards an April or June timing. So it's about 60% priced in for a cut as of April. That is our view as well, that April is the more likely, but nobody was expecting a cut at this particular meeting.
The point is really for inflation to keep slowing alongside this sort of easing in macro backdrop. And as long as that is still the forecast, I do think, it's really hopeful for us to start anticipating rate cuts around the middle of this year.
Nivrita Ganguly, Global News.